Hey, Steve Zanardo here with Remax Zanardo Associates. Just a quick update on the current market. And again, if you've been following us, we've been telling you guys, is advising you that we're going to get 1,000 units per week going forward. And exactly happened this week. So last week we had 20,546 units. This week we have 21,543 units. As we're going forward, we're going into spring season. You're going to get this really packed up with heavy inventory. And you'll start to see that very shortly. 704 sales, a little bit down from the 767, but still very strong, almost 100 sales per day. So that's pretty good. What we did is we sold a few listings last week, which were great. One of them was held as a bidding war. Didn't get offers on that date, which we kind of knew that already, but it gave enough eyeballs to the property where we're able to negotiate back with the real buyers and then get to a price that we exactly set to the T. It's exactly the number what we're talking about, so which is great. And then we onboarded a few more listings. Those listings there a little bit slower. One's listed for a bidding war in Brampton, which we have. It's a high dense South Asian population, so we should get a lot of activity, which we're not, which is obviously maybe a turning time in the market again, but we'll keep you posted with that going forward. A few things here too is we got to look forward. The Liberals have basically promoted Mark Carney as their leader, so that's one and the same, let's just say that. Very polished speaker. Again, this guy didn't live in Canada the last 5-10 years. He's been in the UK. Very polished speaker. He's going to seem very prime minister-y, like, you know, it's going to be a way better than Freeland and Trudeau combined. But don't be swayed. Clearly, that's if you're happy with the current state of Canada right now economically, forget about your feelings, then vote for that part or for the same party, because that's what you're going to get, more of what you just saw in the last 8 years. So just keep that in mind when you do head to the polls. Another thing too is what we're seeing clearly, because we're both sides of the border, is obviously a big pushback with Canadians on American tariffs. I get it. You know, they're hurt. It's our neighbor, the whole thing. And then we're seeing our Prime Minister of Ontario making a fool of himself on all these, you know, corporate legacy media outlets, and it's embarrassing, to be honest, to be out here and then watch that. It's like it's cringy in a sense, where he's threatening the U.S. with energy, pulling alcohol off the shelves. This whole retaliatory, you know, instead of like coming to the table, let's negotiate, let's figure something out. Maybe you're gonna have to, if you're NLP, you match, mirror, mimic. You can't be soft and try to negotiate. Get to something that makes sense for both countries, like you know. But anyway. With that said, I hope, because there's new news that happened over the weekend, and I hope that the Canadians are going to push back like they did with the U.S. regarding these tariffs, because China just put 100% tariff on your basically, this is, what is this, it's rapeseed, which is canola oil. So it's rapeseed, rapeseed oil, rapeseed meal, and pea imports from Canada. So this is the canola industry. Again, a very disgusting product for if you want to like live. But again, they put 100% levy they put 100% levy, or tariff rather, on these imports. So if you look at it, it's going to affect Canadian economy. It's a $5 billion industry per annum. It's 100% tariff on these products. It's going to cost Canada $2 to $3 billion a year, like less revenue. So you kind of put that into perspective, especially in a small economy. And then they put 25% tariff on seafood and pork, which again, it's a $1 billion industry, and that's going to take away another $300 to $500 million in the Canadian industry. So if you look at the impact, so people just think that it's just, okay, we're going to sell us oil. It's manufacturing, it's all these job loss, transportation, everything's all combined. So this is less jobs for the Canadian industry moving forward. So I hope they put this, you know, there's enough pushback with Canadians that want to push back on the Chinese now for these tariffs. But it gets better, because now I talked to family yesterday and they blamed Donald Trump or like the Trump administration on these tariffs. This is the best one, because now, and I had to look it up because I don't want to talk without, you know, do my own research. So basically, this is a retaliatory effect from Canada's tariffs, that they put 100% levy on Chinese electric vehicles and 25% tariffs on Chinese steel and aluminum. And get this, because then you're going to hear, oh, well, they did this just because these new tariffs are in town. No, because the electric car levy that Canada put on China was on October 1st, 2024, so 45 days prior to the election. So this is under a Democratic administration here in the U.S., so nothing to do with Trump. So I know everyone wants to point their finger. And then ultimately, the 25% tariff on steel was October 15th, so a month prior, or literally whatever. November 5th is the election day here, so it was 3 weeks prior to the election. So this was all done prior. So just keep that in mind. So that what this all means is we're talking to a lot of clients right now that have assets into Canada. Clearly sell them. Like I've sold mine in 2022. It doesn't make sense. This is the economic growth in 2022 didn't make sense going forward, and I was correct with that. Now 2025, with all these what's happening now with manufacturing, like America's taking all their jobs back. Forget it. They're taking all their manufacturing, car industries, whatever it is, they're taking it back into the country. It is what it is. They want to give the jobs back to Americans. If you're a country, it makes sense. You know, you can't want other people's jobs. I mean, I know it's not good for Canada. Clearly, it's not a good thing, but at the same time, it's not good for the U.S. either. And these guys are suffering now too with this $30 trillion debt. So they got to pull money back in, create jobs, and re-stimulate this economy. So they're doing the right thing for their country. And it's unfortunate that we're dependent so heavily on just one country. This is something they should have adjusted, in the last 50 years, right? So going into that, what we're advising clients is sell the assets, what you have now. If we can get your investment properties that are currently on the market right now, sell them for today's market, unplug them, and put them into a safe country. And people are going to ask, well, what's a safe country? And I'm going to say the United States. And then they're going to say, well, you're biased. No, I'm not. Because if you take all your emotions out of the equation, like strip them out, strip all your emotions, and you look at it like you're betting on a company. So a company that's going to be traded on the stock exchange. What do you want in a company? You want future growth, what contracts are signed, what's the economic factors going forward, right? I'm going to read you a list. And this is, again, why we're putting money in the U.S. And not only us, it's literally the world, because Europe's a disaster. It's always been a disaster. Asia is Asia. I don't know if you trust that. Where else are you going to put it? Like, to be honest, in Saudi Arabia, I get it. Some people are making that decision. But the safest is always going to be the U.S. This is what we know. We're North American. Forget it. But look at this. Since Trump's been elected, okay, since January 20th, 2025, look at the investment into the country going forward, okay? $100 billion for the Taiwan Semiconductor Manufacturing Company. So this is the largest chip manufacturer in the world. Remember during COVID when there was a shortage of chips and we couldn't get them made and cars are sitting on lots because they were missing computer chips? This is the company that actually the designs, builds, and ships. What they're doing now is they're putting $100 billion into Arizona, and they're going to build out a large facility for manufacturing and creating 10,000 new jobs for that community. So what happens in the future? Shut down? You got chips here. You got no issues. Apple did no manufacturing in America. Now they're gonna put forward $500 billion with a B over the next 4 years to create jobs here with manufacturing. That's 20,000 new jobs. Okay. Apple, because they've done everything in China. Stargate, I don't know if you heard about this. This is going to be the largest AI industry going to be created right in the U.S. $500 billion over 4 years. This is ChatGPT, which is OpenAI, Oracle, and then there's another Asian company that's involved in it, but it's $500 billion. Okay, I think it's a Japanese country. Saudi Arabia, $600 billion investment into the country. Damac, which is a developer from, I don't even know where they're from, but they're like a very large investment development company in real estate. They're investing $20 billion into the country, and it can go up to 40, 50. They're saying. I watch these all in the press releases. I've been watching these all directly, to be honest. Why? Because we're betting on the country for the future. $27 billion for a drug ban and pharmaceutical manufacturing companies coming back to do manufacturing in the U.S. SoftBank, $100 billion. Nippon Steel, which $14 billion investment back, so they're going to start making a more robust steel manufacturing here in the U.S. Honda. And remember, I did a lot of investing in Alliston in Ontario based on Honda plant, because that was a lot of blue collar jobs making a lot of money, and usually not used to buying houses, so they rent and pay top dollar. So it was a good idea. So now if Honda is going to make their Civics in now they're going to move it to Indiana. and build and described to do 200,000 cars annually. What does that do for the Allison facility there? If Allison can bring in their Hondas into the U.S. without getting tariffs, that's going to be no more. They're going to pull it out. It is what it is. So almost $2 trillion in investment literally lasts less than 60 days, which is insane. So if you kind of look at a company that you want to invest in, look at the growth, look at the contracts that are signed in the future. Not only that, there's Volkswagen and Porsche are going to start building cars in the facility. I think Toyota's coming back. There's all these car manufacturers that are going to be building right here in the U.S. So ultimately what that does is create jobs. Jobs create stimulus, like people having high-paid jobs. They can put it back into the economy. What happens? The economy starts to build up. Rates come, nice and leveled out. Inflation comes down. Everything's kind of flowing quite nicely. It's only been less than 60 days. It might take 2-3 years to kind of get this all together, but it's going to be super robust for the future of the U.S. So if you're buying into real estate currently right now, even if the market looks a little shaky, people are not sure, it's long term. We have properties that have gone down in value here. It's fine because it's long term. We're looking more for like a 5-10 year plan. If we had these properties, we didn't sell them, we left them in Canada, we would have lost 30% off the top, even 40 on some of them, and still have that Canadian dollar. At least we have them in the US. When we bought them in at 120, 125, and now we're at 145. So we made like 20% just on the money exchange right there. Plus the investment, if it dipped, it kind of evens out. So they're all still very cash positive. So the future looks bright here. And again, you're buying it at such a low price. And it doesn't mean you got to buy things at $1 million. We have little townhouses and condos, that brand new construction, where the rent covers all the expenses, even gives you a golf package for like $180,000 to $200,000, brand new property. You only need to come down with 30% down, so like $60,000 to $90,000 US investment, and then at least your money's safe here. You got yourself another product that's outside the country, and I think this is smart for a lot of people going forward, because we have friends that are going to Europe and they want to buy in Europe, and it doesn't make sense. Like, even we have family members that want to move back to Italy. It doesn't make sense. Like, there's economically, if you think Canada's mess, imagine like Europe. It's been a mess for 100 years, so safest bet is going to be the US, and just based on all these billionaires putting money back into the US. So keep that in mind. If you have any questions regarding real estate out here, investments, we'd be happy to have a call. We can book an appointment and then kind of lead you through the process, and also what's entailed for you at the end, and then how do you gain access to your property. Have a great day. Hey, yo.